Welcome to part 6, the final and most powerful module of our real estate investment growth course. Today we explore what truly separates small investors from large scale property owners: the ability to scale, automate, and expand. In the USA, nearly every major real estate tycoon, from Grant Cardone to Barbara Corcoran, agrees that you grow not by buying more, but by buying smarter and building systems that multiply your returns while reducing your workload. Globally, in markets like Dubai, London, and Singapore, investors who apply scalable models consistently outperform individual buyers. If you want to build long term wealth and passive income, this is the part that transforms your real estate journey. Scaling begins internally. Long before you acquire additional properties, many investors believe expansion requires huge capital. But global real estate studies from PwC show that mindset and strategy influence growth more than money. In the US, most multi property owners start with one small rental, then leveraged equity, refinancing, and partnerships to scale. The same pattern appears in Europe and UAE markets. Scaling requires moving from a buyer mentality to a business owner mentality. Instead of buying emotionally, you begin buying based on systems, data, and ROI metrics. This segment trains you to see properties as income producing assets, not emotional purchases. When your mindset shifts towards long term portfolio power, your entire investment strategy transforms. As Robert Kiyosaki frequently notes, it's not the assets that make you rich, it's the mindset that acquires them. A scalable business requires automated systems. In the US, seasoned investors rely on tools like Buildium, Appfolio, Zillow Rental Manager, and automated bookkeeping to manage tenants, repairs, rent, and listings. International investors use similar platforms, including Property Finder UAE, Bayut, and UK's OpenRent. This segment explains how to build a tenant screening system, a repair and maintenance response system, automated rent collection, digital accounting and reporting, and routine property inspection schedules. When these systems run efficiently, you free up time to find more deals, negotiate stronger terms, and expand your portfolio. According to a Deloitte Real Estate Operations report, automation increases investor efficiency by up to 40%. Systems aren't just helpful, they are the foundation of scaling safely and sustainably. Real estate is not a solo game. Every large investor, from US wholesalers to Dubai luxury brokers, credits networking as the number one source of opportunities. This segment teaches how to build a network of agents who bring off market deals, contractors who give fair repair estimates, developers who offer pre-launch pricing, mortgage brokers who secure better terms, and attorneys who protect your deals. In the USA, investor surveys by Bigger Pockets show that over 60% of profitable deals come through personal connections, not public listings. Globally, networking events, investor meetups, and real estate expos create partnerships that double your deal flow. When people know You close deals professionally. They trust you with more opportunities, and this trust becomes your biggest competitive advantage. Scaling requires capital, and capital grows through leveraging, not savings. In the USA, investors scale through cash out refinancing, home equity lines, DSCR loans, seller financing, and hard money reinvestment. Global investors use similar tools in Canada, UK, and UAE, but leverage is a double edged sword. Used wisely, it multiplies your cash flow. Used recklessly, it creates risk. This segment teaches you to analyze debt to income ratios, cash flow buffers, market risk levels, vacancy patterns, and interest rate trends. Studies from Freddie Mac show that investors who maintain 20 to 30% buffer reserves grow faster and stay safer during recessions. The goal is simple: expand aggressively, but protect your downside.
Well, viewers, if you didn't subscribe to our channel yet, please subscribe now.
Smart investors diversify, not just in one city but across multiple markets. In the United States, people diversify between high yield states like Ohio and long term appreciation markets like Texas and Florida. Globally, investors diversify between Dubai, high rental yield, Turkey, citizenship benefits, and Malaysia, expat friendly rules. Diversification protects your portfolio from political risks, economic downturns, natural disasters, and local real estate crashes. Reports from JLL and CBRE show that multi-market investors are earned 25% more stability in long-term returns. This segment helps you understand where to expand, why timing matters, and how global diversification builds wealth that lasts through recessions, crises, and market cycles. Every successful investor follows a clear roadmap. This segment helps you build a 5, 10, and 15-year plan focusing on passive income targets, total property count goals, equity building strategy, retirement planning, and cash flow reinvestment cycles. In the USA, financial planners emphasize the compound rental income strategy, where reinvesting rental profits accelerates wealth exponentially. Global wealth studies by Credit Suisse confirm that real estate remains one of the strongest generational wealth builders. With a long-term plan, you stop chasing deals randomly and start building a portfolio that supports your future, your family, and your financial freedom. This is where real estate stops being an investment and becomes a legacy. Real estate is not just property, it is a pathway to long-term wealth, financial security, and generational stability. Throughout this course, you learned how markets move, how investors think, and how powerful strategies can transform even small investments into real growth. The most important lesson is simple: real estate rewards the informed, the patient, and the disciplined. Those who study the market never fear the market, and those who take calculated steps grow faster than those who wait for perfect timing. You now understand the foundations, from market cycles to property analysis to USA and global trends to risk management. to building a future-proof portfolio. But remember, knowledge alone doesn't build wealth, action does. Every successful investor started with one decision: to move forward confidently even when the world was uncertain. This is the end of the course, but the beginning of your real estate journey. Stay focused, stay strategic, and most importantly, believe in the power of your decisions. Your growth starts now. Congratulations on completing part 6 of the Real Estate Investment Growth course. You now have the knowledge, strategies, and insights to build a strong, profitable, and future proof real estate portfolio. But here's the truth: knowledge alone doesn't create wealth, action does. Start today. Review your notes, evaluate potential deals, and apply what you've learned. Engage with our community. Comment below with your questions, share your plans, or tell us your first investment step. Your story can inspire others. Stay connected. Hit subscribe and turn on notifications so you don't miss upcoming bonus modules, worksheets, and advanced investment strategies. And share the knowledge. If you found this course valuable, share it with friends, family, or colleagues interested in real estate.